Ever wonder how a professional audit comes together? Let's pull back the curtain and walk through the process, from planning to the final report. Every audit starts with planning, your project blueprint. You'll identify risks, map key controls, design your testing strategies, and assign your team. Your first audit goal: prove the company isn't lying about what they owe people, not looking for tiny slip-ups.
So look for fires, not dust?
Exactly. Let's trace where the cash bleeds. This is accounts payable. Order stuff, get stuff, pay for stuff. We do a walkthrough, tracing one transaction from start to finish.
To see how it works in real life versus
Bingo.
on paper?
Now let's break it. Ask yourself, where's the trapdoor? Fake suppliers? Paying the same bill twice? Hiding unpaid bills under the rug? Not all mistakes are equal. We rate risks by damage and likelihood.
So a $5 million double payment gets full alarm bells, but a misplaced $10 lunch receipt is just a shrug?
You're getting the hang of this. We can't check ever equal. We focus on the safety nets, the company's rules that catch big mistakes automatically.
Like the computer blocking a payment unless the order matching the receipt is uploaded?
That's a key control. First, prove the safety net exists. Second, test if it held up all year.
Like the computer blocking a payment unless the order matching the receipt is uploaded?
Look at you go! We can't just split up, prove the controls exist. Then, pull 30 random samples to verify they worked all year.
Policy check, then audit the evidence?
Now you're thinking like an auditor.
Ready, coach. What's my target?
Look at you go! We can't just split up the battlefield. The super complex, high-risk stuff stays with me. 10 hours to map the process, 25 hours to pull samples. Over-auditing burns time and client patience.
Work smart, test fast, stay on budget.
The risk and control matrix. It connects the risk, your test plan, and who's doing it.
It's literally a cheat sheet for the whole audit.
Exactly. Ready to execute the audit?
Yes, I'm excited to begin the fieldwork.
Think of fieldwork as the testing phase. Now you're putting your plan into practice. You verify if controls are designed right and working correctly. Ultimately, are risks adequately managed? Trace the vendor lifecycle. We're hunting ghost setups, routing cash to private pockets.
Got it. Filtering for entries missing tax IDs or physical addresses. If it's here, it's a red.
Step 2, paying invoices. The risk is paying for ghost services that never arrived.
Found it. This $50K invoice has no proof of delivery attached. This vendor was added without a background check. How do we know they're legitimate? It was a rushed onboarding for a project. Rushed onboarding is where the fake vendors hide.
Step 3, year-end bills. The classic move is hiding unpaid bills to inflate profit.
Found a January date on a December service. They're burying this cost. Last big risk, duplicate payments.
Paying the same bill twice by accident.
Run the cross-reference search.
Same vendor, same amount, different invoice number.
Caught them. 3 duplicate payments to the same supplier. See? The data doesn't lie.
You just have to know where to look.
Fake vendors flagged, ghost services questioned, year-end hidden bills found,
and duplicates caught. That's a clean sweep.
We save them a fortune by finding those errors.
Exactly. We're not just checking numbers, we're protecting the business. From fieldwork, we move to the reporting phase. Your goal here is to craft a clear audit report. By following the 5 C's, you'll articulate your findings. We don't just report mistakes, we tell the story of why they matter.
Where do I start?
First, condition. What happened? Just the facts.
3 instances of duplicate payments identified to vendor X.
Second, criteria. What should have happened? What should have happened?
Per policy, the system must trigger a block on identical invoice numbers.
Third, consequence. Why should they care?
Resulting in $15,000 in unnecessary cash outflow.
Fourth,
Cause. Why did the control fail?
system configuration error, failed to validate unique invoice fields.
Corrective action. How do we fix it?
TBC, we will ask management for the action plan and due date.
Condition, criteria, consequence, cause, corrective action. The 5 C's. It's perfect.
It actually makes sense now.
We've outlined the issue. Does the data match your team's records?
It's accurate. My team didn't catch the system gap. What is the action plan and due date? We'll update the system config to validate unique invoice fields by SEP 2026.
Great work in there. Getting the client to agree on the findings and the action plan was a win.
Exactly. It prevents surprises and builds trust in the process.
The 5 C's are clean, the client is aligned. Excellent work, Leo.
Report sent. Let's go grab coffee.